The investment economist at Sanlam Investment, Arthur Kamp, is in the country, and Laban Clifford will be speaking to him next. Laban?
Thank you very much, Ken. Yes, indeed, it's a privilege to have Arthur Kamp in studio with us on a tight schedule and his visit to Kenya. Of course, we'll be looking at what brought him here, matters to do with the pre-election outlook, especially for the country as we head to the polls. But before we get to Arthur Kamp, here's what to expect on your copy of today's Business Daily. Of course, we begin with the front page where we have the International Monetary Fund, that's IMF, having warned the fast growth of the Islamic Bank in Kenya. You should see that on your screens right now. Noting that it is without adequate protection of investors, and IMF says that prudential guidelines are not applied adequately. That's in Sharia banking, that's as opposed to other conventional banks. Of course, just raising a red flag on that. That's the current IMF listing. And in your economy and politics segment, 9 terminals have been earmarked as inter-county train stops. That's between Nairobi and Mombasa. That is in towns such as Voi, Titonde, and Emali. And of course, on your corporate segment, that's a National Environmental Authority, NEMA, saying that the plastic carrier bags deadline for August 28th will take effect, and will have started engaging the county officials for the rollout. And a lot more, especially last one on the money markets, because I want to engage Arthur on that, is on looking at the banks still maintain that the interest rate cap, and that has been detrimental to the green financing, particularly in small and medium enterprises. A lot more on the special pull out, also looking at digital business. And Arthur, that's exactly where I want to start from. Today you had breakfast with a few stakeholders and a few business leaders, and of course this issue of the interest rate capping law will always come up. I don't know from where you sit, you call for the kind of the consolidation of the financial sector. Explain that to us.
I think on the interest rate cap particularly, so post the global financial crisis, real interest rates globally have been very low or negative, particularly in risk-free rates, large developed economies. And of course that's important because emerging markets, including Kenya, and Kenya is increasingly becoming integrated with global capital markets, benchmarks off those interest rates. And what I have seen globally, I've seen it in South Africa as well, is that when real interest rates are particularly low, the expectation is that the demand for loans would be high and that lending would be relatively robust. But of course there's the other side of the equation, and the other side of the equation is that the supplier of capital wants a return on his investment. And the risk with capping interest rates and keeping real interest rates low for the lender of capital is that it's difficult for him to assess the risk, and what he may do is he may not then in fact lend to small medium enterprises and also individuals, and so that you may even get a slowdown in credit extension as opposed to a lift because of the capping of interest rates. So the precedent elsewhere is that this may in fact constrain lending as opposed to boosting it.
In your argument, you say that maybe this consolidation would help because the country in itself is now very robust, especially in the financial space. We're looking at the banking industry, we're looking at kind of even the investment at the securities exchange. How do you see that this will actually increase the potential of investment in the country by having, say, the financial authorities we're talking about?
Kenya has a developed financial system. We know this, that the access to financial systems and formal financial intermediation in Kenya is relatively high in the context of sub-Saharan Africa. A very encouraging development, and that's on a very broad basis, whether you look at just banks or insurance industry, on the cost and the efficiency of access, it's all there. Now that's very encouraging, and that's obviously pretty good for collecting of savings and the efficient distribution of capital, which then enhances productivity and helps economic growth. But equally, I think we're at the stage in Kenya where the authorities have indicated that they're moving in this direction, and it would certainly be the right way to go, is to implement prudential regulations. To look at, and Kenya does use global financial reporting standards, but to tighten up on auditing and reporting standards, also the judiciary enforcement of contracts. These are all issues that they seem like soft issues, but they're very, very important issues that talk to the institutional strength of the financial system. And so good governance, all these things that investors talk about need to be enhanced and pursued quite vigorously. And that could, in terms of the consolidation in the financial services industry, it remains particularly important for long-term growth. It remains an industry that absorbs savings, allocates it efficiently, diversifies risks, helps to smooth over consumption and investment spending. And it can be a source of additional strength and productivity boosting or enhancement for the Kenyan economy.
Because we're still on this, I don't know if we can bring up the third story we had yesterday. Alex Mwangi actually interacted with on issues about green economy and just looking at how the banking space is actually saying that, for instance, the interest rate capping law has actually strained efforts towards financing, and the potential of growth for financing projects going green is enormous, but the financing space is largely deficient of actors and awareness that's among the public. And Kenya has been cited as one of the economies at the forefront of embracing green energy in Africa. But as Alex Mwangi reports, there's much more that needs to be done to put green economy financing in the mainstream. Take a listen.
Going green is one of the modern-day catchphrases which refers to efforts geared towards making policy decisions that result in environmentally friendly solutions such as recycling of products. It's, however, an expensive affair.
According to the Kenya Green Economy Strategy and Implementation Plan, the amount of capital required to green infrastructure and key sectors such as energy, agriculture, and transportation by 2030 is in excess of $15 billion.
One of the bottlenecks we realized was the issue of financing. We would have companies who are ready to implement the findings of the audits, but they didn't have the financing, or they wanted to do renewable energy projects.
We have been affected by 12 serious droughts since 1990, with each drought reducing our GDP, our gross domestic product, by an average of about 3.3%.
Financing green projects is a nascent area of financing in Africa which is expanding owing to the threat of climate change. Small and medium enterprises branching into this sector are, however, facing an uphill task securing funding to scale up their businesses. SMEs have seen a credit squeeze since the interest rate cap came into law last year, making their foray into the green economy one that involves a steeper climb. Awareness of how businesses can go green or how to access financing in order to enhance the use of environmentally friendly processes is not widespread.
What I have seen is that very few people know what is green economy. At times we are talking to ourselves. We are here in this meeting. Our farmers are not here.
Here we are talking about the issues of green products, whether it is green bonds. We are even looking at possibilities of having green funds within the market, green REITs.
Actually, the idea here is have a bond that will be purchased by the common person on the street. Why can't we do the Makiba with the green bonds, for instance? Why can't we do that? What's so difficult about it? We have the technology, we have the know-how.
Over half of Kenya's energy production currently is derived from green sources. Alex Mwangi, NTV.
Arthur, a quick comment on that.
Well, I put it in the context of the budget because I've been reading up on Kenya's budget, and it's very clear that the government has to move towards a fiscal consolidation path and consolidate debt. And one of the things I've picked up is on the expending side on infrastructure projects, one might find that there's less available in the budgets for that type of spending, and then that would have to the room for that would have to be created through public-private partnerships. So the private sector will have to come to the party on these issues. Apart from the fact that green energy, of course, that's the future. It's the future generations we need to look after. It's not just ourselves. And so in terms of the context of that, funding is going to be tight from the perspective of having to consolidate a budget. And so increasingly the private sector is going to have to be funding these types of ventures. And hopefully that will be done for the benefit of all with a proper assessment of the risks involved.
All right, just moving on swiftly. In your view, you say that Kenya has a big chance for growth, especially in the run-up towards the elections, which is kind of a different sentiment with what investors will say, because right now we're just about 46 days away to the general election, and it's kind of a hold sentiment where investors are saying, okay, let's just have a wait-and-see approach. But you seem to hold a different approach into this.
The near term is potentially a bit of a slowdown period, and the key reason for that is uncertainty. So business people don't like uncertainty, and what they like is to know that policy is being implemented, that the policies they've come to know and understand are going to be implemented, and that there would be continuity. So you may find that businesses wait for the elections to be over and to assess whether that is still the case afterwards and be comfortable with that, as they have been for a number of years. But ultimately, at the end of the day, although we might have a bit of a near-term growth slowdown, and we know we have drought, maybe tourism receipts are a bit lower, these things are highly unpredictable in the near term. But in the longer term, I think that what has attracted investors to Kenya is still in place. It's not just about the demographics, but it's about the financial system as well. The fact that globally, if one looks at the USA, where there's a shift towards moving away from trade liberalization, East Africa has gone the opposite route. And I think it's a right route to go. Regional integration, removing tariff barriers, removing barriers to trade, the enormous benefits that can come from this. And down the line as well, if properly managed, hydrocarbons, infrastructure spending, if it's done efficiently, can be very strongly growth enhancing. So I see a lot of the pillars that has attracted foreign direct investment to Kenya and that continues to attract foreign direct investment still being in place. I think this is a lull where investors will be waiting to see, just to make sure that economic policy continuity is there and that the policies that have been spoken about get implemented. It's interesting that you bring that up, Arthur, because earlier this week also had the Ministry of Industrial Relations kind of releasing an ease of doing business report, which looks at really to the granular level, how is it to do business in the country, how is it to register business, how is it to, how fast is it, compared to other economies in the region. But isn't the ease of kind of registration of business or the ease of getting documents very different from how it is to do business in the country? The ease of doing business, there's a number of aspects to it, and it is important, and particularly contract enforcement. So businesses want to know, and also in the financial services industry, in terms of new banks coming in, to make sure that they're well capitalized, but then have a proper resolution system should banks start to tend towards insolvency. And then also, though, the contractual enforcement. These are they might seem like soft issues, but to business people they're very real and very important, and they like to see them. I have seen in recent years that Kenya has done quite a bit of improving on that index, and I think partly it's also related to the development of its financial and capital markets. You look at, I'll say, the sub-Saharan Africa from South Africa, from where you sit as an investment economist. How does Kenya fare with other countries in Africa in terms of just kind of the opportunity for business in the region? When we as Sanlam look at the continent, and the rest of the continent outside of South Africa, it's very clear to us the growth patterns. We know that the resource economies have been under pressure, even though there's been a bit of a bounce in resource prices over the past year, not for energy producers, not the oil producers, which is helpful. It's very clear that they're still going through an adjustment process, and the track record on growth in the last couple of years has not been good and is not expected to lift particularly strongly in the years ahead. But the non-resource producers have got a very good track record on growth and continue to deliver persistently good growth. And within that, East Africa stands out very strongly as a region. And again, I think part of that has to do with the integration of trade within the region, but then also a number of other factors that have underpinned productivity growth, favorable demographics for a fair period of time. And so when we look at the region particularly, East Africa certainly stands out on the growth front. And in a world where there's a growth shortage, if I can put it that way, nominal GDP growth in the world is only 2/3 of what it was for many years before the global financial crisis. That's what investors are looking for. Any sectors in particular where you'd actually put your money in? Well, I think when an emerging market grows over time, what tends to happen is that the agriculture sector tends to shrink as a percentage of the total, and the manufacturing, we shift to manufacturing and services. I think within Kenya it's very clear that the services sectors are growing particularly strongly. Sectors I would keep an eye on, of course one has to be very selective on individual companies, but in the manufacturing sector I'm hoping that the potential hydrocarbon story could be quite a positive development for Kenya if properly handled and efficiently handled. That could be a potential upside. All right, Arthur, before I let you go, of course, viewers can follow online your visits. You were at the Nairobi Securities Exchange earlier today, and of course, just deliberating with a few business leaders. Really quickly, investors are watching you right now, and they're looking towards and asking for your advice. In the run-up towards the elections, where would you peg growth prospects in the country, and is it the best time to put your money right now? When one looks at investments over time, there are periods of greed and fear in markets, and one's got to be sure of one's underlying trend. If you do your homework and you're satisfied that the underlying trend is intact, which is long-term productivity growth and long-term efficiency growth and economic growth in the economy, I think that investors would stay engaged and would see a period as this where there's perhaps a little bit more fear around as a potential opportunity. If one is comfortable with the longer term, and then post-election, of course, what investors would do is make an assessment looking at Vision 2030, is it still going to be implemented? And if the answer is yes, I'm sure that the foreign direct investment flows that we've seen into the economy over the recent years, in that instance, would then continue.
Arthur Kamp, I'm afraid I have to let you go, and thanks for creating time for us in your busy schedule. Of course, you can follow discussions with the hashtag Arthur Kamp in Kenya. He's an investment economist from Sanlam Group from South Africa, just in the country briefly, of course, for business meetings and, of course, deliberations in the run-up towards the elections. We're going to take a very quick break right now, but we have a lot more lined up for you on the business scene when we come back.